a quorum, so we will be able to begin. I'm assuming many people will be coming and going as we have different responsibilities late this afternoon. I do want to mention something to you. As you may remember, when we did member budget amendments, we totaled them up, and there was a request for an additional $18.8 billion in expenditures over the next biennium. We have now totaled up the requests for tax relief that will be coming before this subcommittee, and they total $9 billion over the next 3 years. So there's clearly going to be some very difficult decisions made here. Also, I, with rare exception, am going to recommend that these various tax incentives, reductions, credits, whatever you want to call them, will be sent into a special subcommittee that will be meeting over the interim. So in most cases, we will be recommending carryover and be studied over the interim. Frankly, we have had so many requests on both sides that staff is not capable, doesn't have the time to give us the kind of information that we're going to need to make wise decisions for our taxpayers. So with that, let's begin, and let's begin with Senator Ruff.
Thank you, Madam Chairman. If we could start with Senate Bill 185, and this is the bill that extends the tax credit for job major business facilities. It was first created in 1995. The tax credit has been used as a significant incentive for companies considering expanding or coming to Virginia. A company can earn $1,000 for each new full-time job, and can be done over a 2-year period. To qualify, a company would have to create at least 50 full-time jobs or in a distressed area 25. Without the extension, Virginia would be even more challenged to compete against comparable programs in North Carolina and Georgia. There is a clawback provision if the jobs are not maintained for 6 years. Currently, the credit is set to expire this summer, and this bill would extend that for 3 years.
Okay. Is there anyone, you were finished? I'm sorry.
I'm through, yes.
Okay. Would anyone like to speak to this bill? Okay. Yes.
Oh, you snuck up on me.
Sorry. Madam Chair, members of the committee, Christy Morton with the Virginia Economic Development Partnership. We'll just thank Senator Ruff for carrying this legislation. I think he covered all the main points, but this is a tax credit that has been around for quite some time and one that has been a great tool for us for economic development. And so we just hope that the sunset can be extended to 2025. Thank you for your consideration.
Thank you. In general, we will be extending the tax credits whose are being sunsetted, and this would fall into that category. So is there a motion to recommend this? Don't they? I believe, is this the one that's going to have technical amendments?
Oh, that's
no,
right.
it's
yes.
the other one. No, it's
Madam Chair,
actually,
I would move
it's your other
amendment.
one.
Yes. Oh, is it this? No, it's that
No,
one. Okay.
so, I'm sorry. It's the next,
Caught
it's
me
the
off
other
guard
one.
there.
Okay. It's been moved that we recommend reporting Senate Bill 185. Please indicate, I think it has to be verbally. Yes. All in favor say aye. Aye. Opposed? It's recommended.
Thank you. Madam Chairman, the next bill is Senate Bill 27, and this deals with the Neighborhood Assistance Program and Education Improvement Scholarship that was begun when now Congressman Scott was still in the Virginia Senate, and with the assistance of our former colleague Walter Stosh, it was extended to the education part through Walter's effort And then in 2017, no, earlier than that, 2012, when Delegate Massey was involved, it extended it to some private schools. So it has been subscribed in the private side and overprescribed subscribed in the public side. And I just want to give you an example of what they do. One, it's for every dollar that credit, it can bring $101.54 back to education. One of the programs that covers it is the GRASS program, and they generally work the 10th and 11th graders and school counselors in showing young people that they can continue their education and career training despite the family's economic status. They assist the student with FAFSA filings and in finding the right programs for them, whether it's four-year college, two-year college, whether it's a training program. They primarily use retired teachers, coaches, police officers, folks that care about helping young people. The school counselors are so overwhelmed in most cases with a lot of social disruption issues right now that it's great to have somebody come in and do that. The money, like I said, was split between the public and private, and this would not require any more money. We're still below the amount that was set aside and planned in the budget. I think that April can speak to that, or Tax, or whoever would like to.
April?
Madam Chair, the difference is, even though there's some unused portion, because it's not all completely captured in the revenue track, it does require an adjustment. So if you were to go up to, I think, the full 25, you would need to set aside somewhere up to $16 million. But we don't know the exact impact of that. And if Tax is around and they have a more thorough, we would welcome their advice as well.
I think we need to adopt the technical amendments at this point. So I would ask you to do that.
Is there a motion to adopt the technical amendments?
So moved.
It's been moved and seconded. All in favor, say aye. Aye. Any opposed? Okay, they're adopted.
Now I would like to bring up the big gun of Walter Stosh to fill in the gaps.
Thank you, Frank. Thank you very much, Madam Chair, members. Glad to see you again. In fact, I'm
Nice
glad
to
to
see
be
you.
anywhere of late. These are programs that I have followed for many years and indeed employed in the effort to help lift young people who are impoverished up out of poverty. And we have found that one of the best ways to do that is education. So the whole essence of this program is targeted towards what we call financially disadvantaged students. And if I can summarize, because the two programs are different but complementary, the Neighborhood Assistance Act, which is known as NAP, seeks private philanthropy, private donations, and then uses those donations to hire and train primarily retired school teachers, and they're sent into the public schools to help identify young people who might not otherwise have a game plan after high school. So the funding from the private sources, in effect, supplements the public schools, because the guidance counselors, while they're dedicated and talented people, really do not have the time nor the expertise to deal with the intricacies of the financial applications, the so-called FAFSA form, which is worse than any tax return I've ever seen. But there are complications that this particular cohort of families, typically first generation, oftentimes no one in the family can help them, they need this type of assistance in the public schools. So this program, the NAP program, is used heavily, substantially, for that purpose. And as Senator Ruff says, each dollar of credit that the state gives up generates $1.54 in private philanthropy. Now, those of you may remember our discussions in the past in this committee. I've always had a preference towards grants instead of tax credits. And I still think that's good philosophy, except there's no practicable way to give grants to several hundred or more private donors for this purpose. So this is a case where I would break my rule in terms of supporting a tax credit, because it is a means of soliciting these private donations in a very efficient way. The program has a $9 million cap that DOE monitors and allocates among foundations that are providing these services. And then once that $9 million is exhausted, then it becomes oversubscribed. As Senator Ruff says, there's roughly $18 to $20 million of requests every year for that $9 million. So it is clearly a program that's in demand. The other one was designed primarily to support young people who are financially disadvantaged or disabled in private schools. That's the program that's called the Education Improvement Scholarship Program. That program, while well-intended, did not become fully utilized because of the demand. So what Senator Ruff is asking you to do is to change that program so that it's not only for private schools, but it can be used to support these advisory services in public schools. So once again, the effort is to use private philanthropy to support a public good, namely public schools. So that's essentially what the program does. There is a provision in the bill that would increase the NAP credit from its current $9 million cap to $25 million cap. If that is an impossibility in the budget, that is less important than expanding the other program to allow it to be used for public schools. So that's pretty much it. The donors receive a 65% credit for their donations, which is an incentive. Some would say generous, but those of you who are involved in philanthropy, you're asked by hundreds of organizations for assistance, so there's a lot of competition for private dollars. So this has proven to be an effective means of attracting private dollars to use for low-income students. That's really it.
Thank you, Walter. One of the advantages of being on this committee is I found out about this NAP program, and my husband and I have been participating in it. And it's one of those things that really, when you go to bed at night, you feel good that you've done.
Thank you. It's true.
Thank you.
Well, it is my post-retirement calling, and the organization I'm part of serves about 8,000 young people per year and generates about $70 million in financial aid. So we know it works.
Yeah, thank you. Well, so perhaps the way to do this is to sort of divide it into two sections. Does that make sense to staff? So that we would increase, let's see, authorize usage with the public schools as well as non-public education. Isn't that what you mentioned, Walter?
The Education Improvement Scholarship Program currently is limited to assisting low-income students to attend a private school. What Senator Ruff is asking you to do is to change that so it can be used to assist students in public schools.
As well, yes.
Right, as well, yes.
And you said that that was more important to you than the money piece. But we think we could probably go to about 12 million instead of 25 million.
Hey, take what you can get, right? That would be wonderful because it is under pressure and it's a very effective program.
Yeah, I'll make a motion to do the 12 million, and also to do the language thing that would open up the education improvement scholarship to public schools programs in addition to the private schools.
Okay,
Madam
it's been-
Chair-
Yes.
Sorry to interrupt, but do you mind if I just clarify one point, which is that Senator Ruff's bill is about the neighborhood assistance programs tax credit. And there is a Department of Education administered program that's a part of that credit. But the bill in its current form doesn't address the education improvement scholarships tax credit, which is a separate tax credit. This bill does?
I was of the impression that it is.
Forget what I said about that, but the other thing I would just mention is that the aspect that Senator Stosh was describing about making it available for public school programs is also already in the bill, I think, if I understand you correctly.
Right.
It allows for scholastic assistance for students who are attending public school rather than private school, which is not a part of the current. So the amendment, as I understand it, but certainly correct me if I'm wrong, is to go to 12 instead of 25, leave that aspect of the bill having to do with public schools untouched.
Right, that's new language for the public school in the bill.
Currently in the bill.
It's new language in this bill.
Correct.
Right.
Senator Newman.
I'm slow. Can you also explain to me how the Hackworth bill interacts with this or does it?
So Senator Hackworth's bill is raising the cap for the education improvement scholarships tax credits. This bill would be raising the cap for the DOE administered part of the NAP program. Is that right?
Well, the current cap under the NAP is 9 million.
Right.
I think I heard the Madam
Yes.
Chair say that her proposal is that that be increased to 12 rather than the 25 that's in the bill. And the
So,
other part of the bill deals with allowing the separate education improvement scholarship program to be used more than just private schools, but rather for public schools.
so to answer Senator Newman's question, raising this cap is not something that would conflict or overlap with raising the cap for the education and school
Right.
improvement scholarships tax credits.
Tyler, did you have a comment?
Madam Chair, not to complicate it anymore, but I can explain the three bills and the differences between all three bills at one time. So let's start with Senate Bill 27. This is Senator Ruff's bill. This is related to the Neighborhood Assistance Program. It would increase the tax credit cap on that program from 9 million to 25 million. It would allow CPAs to receive the Education Improvement Scholarship Tax Credit if they provided in-kind accounting services to scholarship foundations. And then it would permit the Education Improvement Scholarship Tax Credit to be used to provide scholastic assistance to students in public schools, which would mean counseling. Senate Bill 16 is Senator Hackworth's bill. This would eliminate the sunset date currently for the Education Improvement Scholarship Tax Credit. It would increase the annual credit cap from 25 million to 50 million for the Education Improvement Scholarship Tax Credit, and would then increase the value of the credit from 65 to 80%. Senator Destuff's bill, Senate Bill 709, would eliminate the Education Improvement Scholarship Tax Credit sunset date and extend certain provisions related to relaxed requirements and enhanced scholarships for children with disabilities, which is set to expire in January 1st of 2024. And this was something the General Assembly gave those relaxed requirements and enhanced scholarships back in the 2019 session. And so those are the three bills.
Madam Chair?
Yes, Senator Barker.
Yeah, I think what we want to do is basically focus largely on Senator Ruff's bill
Yeah.
here and add from the NAP cap, take that from 9 to 12, and then hopefully we can do more given the applications that come in on that one, which we're still a little higher than 12. and that we deal with the adopt a language for the education improvement scholarship tax credits that would provide use of funds for public school operations, but not increase in the total amount, which is the 25 million or the 65% in that from Senator Hackworth. Yes.
As usual, I arrived late. Are we dealing with these bills separately, or are we kind of putting them together?
At this, at this point, we're trying to understand how they interrelate with each other. We were not planning to do them all together, but since they're also on the same topic, I think we'll get a better outcome if we do.
So we're going to make it one bill?
Yeah, I think we're going to
Okay.
make it one
Then
bill.
I'm not going to make a motion.
Oh, okay.
That's fine.
Madam Chair,
Yeah. Senator Newman.
maybe if Senator Hackworth and maybe DeStefan can just give this their piece, if this is going to be all rolled together and have soup, maybe that would help.
Thank you, Madam Chair, members of the committee, and I have talked to the Honorable Walter Stosh here about this, and we have agreed that we would not, and I guess we need to do an amendment, we would leave the current cap at 25 million where it's at, and then we would also reduce the credit that we're asking for to 70% instead of 65%. I think he can explain why that he feels that is fair because of the changes in the federal, I think in 2018, the IRS requirements on reporting. And of course, to remove the sunset date. We would want to definitely do that. So we would do an amendment that would leave the cap where it's at 25 million. And then also that amendment would be to increase the tax credit from 65% to 70%, not the 80%. And then leave the sunset date where that we remove that. Are you clear on that?
I'm clear. We have a pretty good policy here as it relates to sunset dates, so I don't want to remove the sunset date that is there. That forces us to re-examine things periodically as we're going through.
Okay.
And I think that's just good management to do that. So I would not want to do that.
If we could get the 5%, I would say that's, that we'd call that a win with what that Senator Ruff is trying to do, and Senator DeStef, I would be agreeable to that.
What would be the fiscal impact of the 5% change?
Madam Chair, Senator Barker, we would have to ask tax because we didn't know about that particular amendment in advance. So we'd have to ask tax if they knew what the incremental difference would be for the 5%, if they have an estimate.
Madam Chair,
Yes, Senator
I'm
Newman.
not smart enough to understand, maybe Walter is, but it won't increase the amount of money that goes out. It's just a
No.
matter of how much you can write off, right? So, I mean,
That's
you
correct.
really, you're just not going to have as many subscribers by a little bit, so it doesn't increase the fisc on it by raising the percentage, right? It's just how much you can write off.
That's correct.
Yeah.
So I don't think tax would tell us that it is actually going to be more, because it's still going to be the same number.
Madam
Yes,
Chair,
Tyler.
Senator Newman, so you are correct, but the official revenue forecast only assumes a $13 million revenue loss from the tax credit because it's undersubscribed, even if the cap is at 25.
Right.
So we would have to add an additional, and we don't have that estimate. Tax may have it.
Hi, Madam Chair. Kristen Collins from the Tax Department.
Oh, good. Thank you, Kristen.
I hadn't thought about it until about 2 minutes ago, so my math may not be 100% correct, so you have to bear with me. But we had estimated in Senate Bill 16 that increasing the percentage from 65% to 80% would be roughly a $3 million impact based on current utilization. So if you only increase it to 70%, I think that would be about $1 million, about a third of what that amount is. And to the extent, it increases in the future, there could be additional impacts.
So are we ready for a motion?
Can I make it a little more complicated?
Oh, please do.
George, we could extend the deadline to the commonly deadline that we have. Is that 2025? Is that what it is?
2028.
So we could, I don't know, we could do that.
Yeah.
Yeah, and then
With
the
our
policy
typical-
item is, can we go up to 70%, which I think I would be in favor of, but that doesn't mean that others might. But anyway, okay, thank you.
Okay, Tyler.
Madam Chair, Senator Newman, the committee policy in the budget is 2025, but this tax sunset date is already set at 2028, so you could just leave it.
Oh, just leave it.
Yeah.
Yeah. Okay. Senator Dista.
Madam Chair, if I may, Senator Newman, to help you on that a little bit. On the special needs requirement, we put that originally in at 2024. We wanted to try to match that to the 2028 as well. And if I could, we've traditionally hit about 13 million a year on this, no matter what the cap was. So Walter, if you want to correct me, I know we've worked on this for many years. It's never gone over $13 million since we've worked on this for the last 7 years. It's never gone over $13 million. So with the 25 million cap, just keep in the back of your mind, we've never gone over $13 million. And Chris and I were chatting a minute ago on the difference between the original was $3 million if you went up to 85%, but we had chatted about $1 million. We actually put a matrix together before on every increment of it going up, and it's been pretty much true to form for the last 5 years as we've tracked that. And I'm just saying that I think that's very beneficial as we're looking at where the cap is today, what we're trying to do, and how it works. So my only request would be is that we take the 2024 date and match that with the 2028, so it all expires at the same time. And I think that would make it all consistent and a lot easier. But
April.
Madam Chair, since that is already assumed in the revenues currently, the total of all the actions that have been discussed would equal about 4 million per year would be the difference.
So.
All right, I'll make a motion for the NAP to go from the 9 million to 12 million, and for the other to go from 65% to 70%. I don't have a whole lot of information one way or the other on that, but it's not going to be overwhelming, I don't think. And to build in the language that provides support not only for the private schools, but for the support for students who are in public schools and need some help to reach their potential on things. So, and then do the 2028 figure. So
I was going to say,
Right.
what is this sunset?
For the
What are we gonna do?
We're going to leave the sunset where it is. We're not going to,
from 2028.
yeah, we're going to
for
just
both of-
be
for both of
silent
them.
on the
Yeah, for
sunset.
both of them. So.
Okay. Okay, it's been moved and seconded. All in favor, please say aye. Aye. Any opposed? Good. Senator Hackworth, you're next on the sign up, but I assume that was, we've done it. Okay, good.
Madam
Thank
Chair,
you.
members of the committee, thank you very much.
Thank you.
And also, Madam Chair, we could roll in Senator Steff's and Senator Hackworth's bills into Senator
Yep.
Ruff's bill.
That'd be
So,
great.
Yes,
Yeah.
yes.
That way Frank
Okay.
can present it.
Yeah.
Next up is Senator McPike.
But one more, and I'll
Oh,
get out of here. I apologize.
you have another one?
Senate Bill
Before you
736.
do this, I just want to make sure that people know that Senate Bill 288 and Senate Bill 31 are by for the day. So if you're here to deal with those two bills, we're not going to handle them today. Okay, sorry, Senator Ruff.
31 and 288.
288 and 31.
Right.
Thank you, Madam Chairman. Senate Bill 736, this deals with one of the fastest growing segments of our economy, data centers. Last year, we made changes that allowed for for poor communities to have different standards than on the number of jobs and the investment. This doesn't change any of that. This currently would allow if they make up a $150 million investment in a county, they could create, wouldn't have to create but 25 jobs. That matches what is really become the national standard. Part of the reason that it can reduce that number is if you have one facility in the state that is doing the backroom type stuff of payroll and that type stuff, you don't need to duplicate that. And so it's really more of a technician type positions that they will be needing. And I think we have a couple of people who'd like to speak on it. One of them will be on Zoom, a former colleague of ours, and then Chris, you can speak to it, please. All right.
Okay.
Zoom.
I would bet you it's tag greasing.
Yes, tag. I couldn't think of the word tag. It's a tough word.
Tag Greason, would you please unmute?
All right, is it possible that that worked? Thank you.
Yes, you're on.
Madam Chair, thank you very much. I'm glad that you all are there in person. I'm sorry I'm not there with you. As Senator Ruff explained, this is an idea that would allow us to be more competitive in the data center industry across the Commonwealth. Right now, under statute, you have to hire 50 jobs, you have to deploy 150 million in capital, and you have to ultimately pay those jobs at a higher than prevailing wage. That is very, very easy to do in Data Center Alley. We're hiring those people, but it's very, very difficult to do if you establish a new data center location outside of Data Center Alley. So point one is, how do we, according to JLARC, how do we get data centers to expand to other areas of the Commonwealth? Point two, 50 job creation is the highest standard in the entire country. And every other state is either 30 or lower, and some are 20, and some have no jobs requirements. So this bill will reduce the job requirement from 50 jobs down to 25 jobs. It will not affect the legislation that Senator McPike passed last year that ultimately helped the economically distressed communities. And in general, I think this is an idea to help the industry that is driving so much revenue into Northern Virginia also drive revenue in other parts of the Commonwealth. Madam Chair, members of the committee, I'm happy to answer any questions, but that's all I have to say. We're in support of this bill.
Thank you.
Thank
Was
you.
there anyone else who wanted to speak on this? Okay. This has a really big price tag on it.
That's just the current one.
The current one we have is reducing our revenues by $150 million in 2021. My suggestion, as I had said at the very beginning of the meeting, we just have not had the time to analyze in the depth we need all of these bills. And I would think that this would be one that should be carried over for the year and studied in the special subcommittee.
Madam Chairman.
Yes.
I'm not quite sure where you get that 150 million. That would require the private sector to invest $150 million, and it would create at least 25 jobs. It would not.
I'm saying that the current exemption
Okay.
is
all right.
the current one. I'm sorry, the one, the existing one has resulted in a negative revenue impact of $150 million last year.
Yeah, fiscal year 2021.
So I just think we need to really go deep into the implications of this, and I just don't think we can do it in this time frame.
I'm not sure that it's going to change the equation, Madam Chairman, if they continue to build in Loudoun or in Prince William versus moving out to another county. I just don't see that equation quite the same as you do.
Well, but Senator Ruff but there could be more. And if there are more, then we would spend more than what we're currently spending on the credit, right?
Madam Chairman, I would respond if ABC Corporation wanted to build a data center and they're not going to be making the decision to not build. They're just going, it may change where they build. But if they want to be in this region, they're going to do it. They just may have to pay more real estate in Loudoun County than they would in a neighboring county.
Senator Norman.
I understand that, Madam Chairman, thank you, the 150 million. Has there been any takeoff of pro forma, what the financial impact would be, if anything, if we reduced it down to 25? And that's not an argumentative question, I'm just trying to get my hands around it.
If we reduce the job requirement to 25, well, that's basically what this would do.
That's all this does.
What I'm trying to figure out, what is the fiscal impact of that?
Forcing them to be in a county that they're already in.
I understand where you are.
Okay.
I'm just trying to see if there is an adverse fiscal impact.
Senator Barker.
Yeah, it seems to me that we don't have necessarily all the information that would allow us to answer that question right now. And that what we need to do is to probably carry this over for the year and get the information during the off session.
Was anyone else?
Madam Chairman, I'm befuddled because if they need a data center, they're going to build a data center. They will be able to build that second or third or fourth or 14th in Loudoun County and only employ the number of jobs they want because they've already met their 50 quota for that.
Yes.
So maybe to staff or somebody, if we did that part, are we saying that there's no cap whatsoever now? If you fill the entire state, it could be billions of dollars. Is that where we are today, or is there a cap of 150? Or can it be as much as they can do? Well, Madam Chair, maybe if, whatever we're going to do, but if we hold it over, it seems like to me that we need to know how much it is, right? So if we wanted to put the cap at 150, but allow it to be done in rural counties, that's great, right? Because you can be doing it by this, but there's no cap. And I guess that's the question is how do we deal with the lack of a cap? Because right now, they could do this in Loudoun County under current law and go to 250 million, right? But it's just a matter, so that's more complicated than help, but there it
is. Which is, I think, I'm not sure we're on the same side on this, but I think we agree that it's extremely complicated and it's hard to do basically on the fly, which is the reason for the suggestion to carry it over for a year and study it. And have and by the way, I do intend to have results for next session, and to the extent some of them, this isn't, but a tax credit, which we don't usually do in the next year, I would try and change that policy for next year so they could, if it was tax credits. Yes.
All right.
So do we have a motion?
I move that we carry this over and have this issue studied in the joint subcommittee that we'll be putting together. So,
is there a second?
Second.
It's been moved and seconded that this be carried over and put into the joint subcommittee. All in favor, say aye.
Aye.
Aye. Any opposed?
Thank you, Madam Chairman.
4-3 to 2 at 3, yes. 2 abstain. Okay.
yeah. I'm not trying to be a pain, just. No, I know. This is complicated.
It's very complicated.
I'm going to get it before.
All right. Next, Senator McPike.
Thank you, Madam Chair. Senate Bill 513 involves local taxation, the methodology for local taxation of data centers, so it is not the state tax credit, to be clear. It is and does not have a state fiscal impact, to be clear. This has to do with actually how the current local taxation works with data centers. And I think the issue that has sort of emerged over the last year or two is the difference of how that taxation specifically for income-based model works and applies. and the net impact, and I've done some leases of buildings itself, and so if you conceptualize, I think the income-based assessment is pretty fair for an office building where we can sort of judge based on both assessment as well as value of income. In the context of the data center, where you have hyper use of equipment that is feeding the services of the building, which has higher rates of depreciation, the income-based model does not help to support sort of a real valuation. That is essentially the construct of the issue that is creating a little bit of, frankly, a pretty significant imbalance in how data center components are taxed. You still have the core and shell, that's still the real estate tax. You still have computer and equipment, that's still taxed within that category.
That's personal property tax on that?
What's that?
Personal property
That's
tax
right.
on the computer equipment, is that correct?
That's right. It's on
Yeah.
the taxes tangible business property.
Right.
So, but there can be still differences where you have a tenant that leases and does the same thing. That would be taxed different than as if the owner actually had the same equipment. So there's disparity across the board. This seeks actually to use an assessment model, not the income model, to make sure there's clarity across the board. Otherwise, we start to get different jurisdictions taxing things at different, and so it creates a very different and difficult landscape in order to understand and build predictability of how an assessment is going to occur, Madam Chair.
Madam Chair?
Yes, Senator Barker.
My understanding is that, I think you were talking about this at the end there, is that there is a significant difference in some situations when you have it's who pays the tax for the, for the, not the computers and those types of things. And that it would be, in many instances, significantly different if it were the tenant from what if it's the owner of the property. Is that correct?
That's right.
Okay, and so does your bill then basically make those provisions comparable regardless of who's paying the tax?
Correct, because it does it not on the income-based model. And so by
Right.
shifting that over and ensuring the captured categories of fixtures and defining those sort of helps to establish that predictability, if that makes
Right.
sense.
Yeah, it seems to me it makes a lot more sense to have consistency regardless of who's paying the tax rather than disparate, highly disparate figures there.
Was there anyone who wanted to speak to this bill? Oh.
Madam Chair, Josh Levy with the Data Center Coalition. We just want to stand up and acknowledge our support for the bill and thank the senator for his leadership. We do have a large crowd that's willing to
Yes, I
speak to the
see
bill.
you do. I'm going to have to limit you to 3 minutes total.
Go.
I would just acknowledge Senator Barker. I
Madam
think hit
Chairman,
it
are they all
directly on
gonna
the
say
head.
the
This is
same
about
thing?
providing consistency both within and, I'm sorry, Senator Newman.
I was just going to say, is everybody behind you going to say the same thing?
Yeah, I think they're all just going to acknowledge their support, sir.
Oh.
Fairfax County is thinking ahead differently.
Yeah, this is the support crowd and then,
All right. Okay, so
So-
we see, yes, we see your support. Okay, thank you. Is there any opposition?
Thank you, Madam Chairman. I'm Claudia Arca with Fairfax County, and I have someone from our tax administration in the Zoom room, I think, if you all have technical questions. We actually see this as a substantial departure from current law, which requires that we use assessment principles that are generally recognized. And so I think the important thing to understand is that Virginia law requires us to use real property assessments that are uniform in the way that they're applied and 100% fair market value. And so localities try to use best practices and update our assessment methodologies, particularly as new businesses and industries enter the market. In the case of data centers, as more began located in Fairfax County, the county hired experts to assist in the assessment of these businesses. And when we did that, the county learned through filings from data centers at the U.S. Securities and Exchange Commission that they were reporting to the SEC that 100% of the income produced at their properties was derived from real estate. But they were reporting to the county 50% of their income was derived from business value. And so that's really what made the changes in the assessments that we were using based on the company's filings. And so that's what sort of led to some of the changes that we made in the assessment values that we were looking at. And so we do use the income approach as part of the assessment that we look at in the data centers. I think when you look at what we are valuing in our assessments, the highest assessment on any data center in Fairfax County right now is about $740 per square foot. A recent sale in Manassas, Virginia at a data center was for $955 per square foot, which is in line with what our assessments are. And this would have a significant fiscal impact for Fairfax County, approximately $2.7 million to $5.4 million per year based on our existing data centers. So we oppose this legislation. And like I said, we have someone from our tax administration if you all have technical questions. Thank you.
Thank you. Okay.
Madam Chair?
Yes, Senator
So
McPike.
the nice thing is, obviously, even with the adjustment and stabilization of the bill of the tax rates, all localities have the ability to go back and adjust tax rates. So number one, so the fiscal impact can be ameliorated through those adjustments. The reason why even my board, even though they've had this issue in Prince William County, they support it because they don't have the ability to address through the appraisal process, through the realtor, because of sort of the separation that's required. And so they're seeking also to make sure there's a level playing field. So they don't see this sort of hyper equipment that has depreciation value that is not recognized. And I'd also like to just clarify that the sale of these properties are also selling services that are packaged. So it's not just about the real estate, but a total complete package of services that go with it. So it's a little bit different having owned and operated and helped to do leases in office space. It's a little bit of apples to oranges when we start to look at those comparisons.
I don't see any more people desiring to speak. Is there a motion?
I move to report.
Second.
It's been moved and seconded to recommend reporting. All in favor, say aye.
Aye.
Aye, opposed? It's reported. I believe you have another one.
Yes, Madam Chair. Senate Bill 515 is an earned income tax credit, which is the substitute would align with the governor's budget, as well as, I believe, Senator Barker's Senate Bill 343. And we'd be happy to roll into Senator Barker's as a practice of the lower bill number, Madam Chair.
Okay. Thank you.
Thank you.
Then, while you're here, perhaps Senator Barker would like to describe his Senate Bill 343.
Maybe I could start with a motion to roll 515 into 343.
It's been moved and seconded that,
The 515.
515 be rolled into 343 with co-chief patrons. All in favor, say aye.
Aye. All right, on mine, what it takes is in the governor's, Governor Northam's budget, the introduced budget, it's proposed to have a 15% cap in terms of the earned income tax credit that would be allowed, authorized for both years of the biennium. My bill takes it up to 20 and starts it in fiscal 23 so that it's covered in both years of the biennium here, whereas it was with Senator McPike's bill, it was not in place in 23, but it started in 24. So this gets the relief out to lower income families a little quicker. And it has I think it's a roughly $53 million per year. So it's about $105 million total impact to the revenues for the biennium.
Okay. Are there any questions from the senators? Would anyone in the audience like to speak to this bill? Good afternoon.
Good evening. Emily Griffey, Chief Policy Officer, Voices for Virginia's Children. We support this measure as one of the best ways to help low-income families in the state. 72% of the families that would benefit from the EITC have children in their households. We know that families are very much struggling as a result of the pandemic, and we believe this targeted measure is the best way to help low-income families. Thank you.
Thank you.
Good afternoon, Madam Chair, members of the committee. Rodrigo Soto with the Commonwealth Institute. TCI strongly supports strengthening the earned income tax credit in Virginia to help hundreds of thousands of working families across the Commonwealth make ends meet. Along with what Emily shared, we do believe that this proposal not only helps children now, as we mentioned, over 700,000 children in Virginia would be impacted by this as well, but research shows it does have lifelong impacts to improving both health and education outcomes. The AITC is a powerful tool for supporting local economies, including in rural areas and small towns. It's a highly targeted policy that would ensure a more equitable recovery from COVID-19, and we hope that the committee advances this proposal.
Thank you.
Hello, Madam Chair. Dana Wiggins with the Virginia Poverty Law Center. And in the interest of time, we support the measure and thank the senators for their efforts. Thank you so much.
Thank you. Is there anyone who wishes to speak in opposition to this bill or these bills? Okay. Is there a motion on Senate Bill 343, which will have Senate Bill 515 rolled into it?
Yeah, I make a motion to report.
Second.
Madam Chair.
Yes. It's been moved and seconded, yes.
Madam Chair, I'm going to vote no, and I'll be very clear why. I think the Senate of Virginia and the General Assembly has for years taken a position that we're going to help people that need to help them, but we're going to do it through our assistance programs. Doing this in the tax code, in my opinion, is just the wrong way to do it, and I know that's a fundamental difference. But the Senate made a determination years ago that we were not going to go down this path. I think if we are going to provide welfare or tax credit, welfare or assistance in all the ways we do, and HHR does, we should do that. And, you know, God told us to love people, but I don't think the tax code is the right place to do it. So it's not that I, you know, in any way dislike these people. I think using the tax code to refund money is just the wrong way, and the General Assembly has not done it in the past. And so that's the reason for my no.
Thank you. Anyone else? Okay. All in favor of recommending reporting, please say aye. Aye. Any opposed?
No.
It's reported 3-2.
Thank you, Madam Chair.
Thank you. Senator Lucas, you've been sitting for a very long time, but it's probably the first relaxation you've had all day.
How about all week?
Okay.
Thank you, Madam Chair and members of the committee. I will be brief because Senate Bill 520 and House Bill 589, which is Delegate Scott's bill, is to incentivize the production of episodic content in Virginia and aid the development of infrastructure for manufacturing of entertainment and instructional content. As you know, I have been introducing these kinds of bills for the film industry over the years, but Madam Chair and members of the committee, the Virginia Department of Tourism, film industry, and the Virginia Department of Partnerships should be enlisted to conduct a study. In 2017, JLOC issued a report evaluating film incentives as a part of its economic development and incentive evaluation series. However, in the years since that report was presented, the landscape and economics of media and entertainment has evolved significantly. So with that, Madam Chair, members of the committee, I have an ask, and that is to continue this bill to 2023 with a letter to the Virginia Department of Tourism, Virginia Film Office, and Virginia Economic Development Partnership to conduct a study. And the reason for this is because, as you all know, in 2017, JLOC did a study. So this time we're asking that the Virginia Department of Tourism, Virginia Film Office, and the Virginia Economic Development Partnership conduct the study.
Okay. Yes, it's been moved that the bill be carried over and studied in the interim. Would you like, excuse me? Second. Okay. Would you like us to also have it in our special subcommittee to be looked at in the interim?
I would like that very much, yes.
So it would be in two places?
Yes,
Okay.
please.
So let's add that as well. Okay.
Thank you.
All in favor, please say aye. Aye. Any opposed? Thank you, Senator Lucas.
Thank you, Madam Chair, members of the committee, and I didn't mind waiting at all. This was quite interesting listening to these tax bills.
Senator Hanger? And then Senator Peterson.
Okay. Yes, I'm pleased. Thank you, Madam Chair. Members of the committee, I have Senate Bill 579 this evening. And I'm actually very pleased to hear your introductory remarks there in terms of your support for the tax study over the next year. I concur with that, and I've been mentioning that every time I get a chance, and hoping that that's what we will do. I am, however, carrying one of the bills that would use some of our one-time cash that we know we have. Senate Bill 579 is a bill to authorize a tax refund, which actually is the previous governor, Governor Northam's initiative, and Governor Youngkin's initiative now that we would do this. And I recognize where we're at this moment because we feel like we've got surplus funds and that it would be appropriate to return some of it to the taxpayers, but we also have a lot of demands in front of us. And I think in terms of priorities, I would suggest I'm probably on the same page as you, Madam Chair, in terms of the potential large deposit to the VRS, the meeting our responsibilities back on SOQ funding, the mental health issues that we need to address, and putting some additional money in the reserve, public safety. All of those issues are priorities, but I really believe with cash on hand and the things we want to do as one-time deals will allow us the ability to make some modest refund to the taxpayers. Now, Governor Northam had proposed in the budget, I believe, $250 per individual of $500. Based on your tax liability, it would be less if your tax liability wasn't that much. The bill that I'm carrying right now, at the suggestion of the current administration, is a bit more, $300 and $600. So the numbers, I recognize we can't decide that today, perhaps, unless you're ready to pull the trigger. I'm not sure we're there yet, but for this particular bill, wherever we put the number, there's an amendment that the Department of Taxation has suggested, which I concur with, and it would apply probably to a lot of us who hang out down here in the winter, in extending that deadline to November the 1st, so that people who request an extension when you're at your normal tax filing time would be eligible for the return. And I think that they are here and would concur in that. That is correct. That was at their request. If we're going to consider this in any form, at any level of refund, that we should also extend it to people that request an extension for the taxable year. So that would extend it to November 1st, I believe. Is that correct? Okay. So that I would ask for that amendment. Other than that, it's pretty straightforward. I think we need this language in the bill if we're going to advance the bill. The number is the tricky part, and obviously, we'll have budget action as well on this, I expect.
Okay, so could we have the amendment?
Yes, Madam Chair. So the amendment would just be, as Senator Hanger described it, to change the dates from July to November on lines 12 and 13.
Is there a motion on the amendment?
On 13?
So moved.
It's been moved and seconded the amendment be agreed to. All in favor say aye. Aye. Amendment's agreed to. The one thing that stands out to me on our staff analysis is that this would have an incremental revenue loss of $203
Right. And that's why I'm suggesting
million.
I'm suggesting that the number needs to be adjusted based on what we can legitimately afford. This will, the 250 and 500 is close to $1 billion. Increasing it by this modest amount will increase that by another 202 million.
Right.
The estimate anyway.
So you're suggesting that that we handle this in the budget itself? Is that what you're saying?
Or if you want to amend it now to reflect what the budget already carries, I would not oppose that. What I'm saying is we probably aren't at a moment where we know what that number should be.
You're talking about which budget? The current, the Northern budget?
Yeah. Right.
Okay.
Right.
This is the one where I said if you wanted to do it, you could do like a revenue clause.
Continuously class.
If y'all want to commit to the 250 and 500, I would be good with that at this point. If we don't want to eat the additional 200 million. I want both governors to get credit for this. That's what I want to do. I'll make everybody happy because I'm not into the other stuff yet.
Well, I'd like you to get credit for this.
Madam Chair?
Yes, Senator Barker.
Senator Hanger, I agree with being very cautious in terms of moving forward on this type of issue at this point. And clearly, I'm with you on VRS funding, what we need to do to make whole the school systems around the Commonwealth. We're not fully funding SOQ. We're not dealing with all the support positions where we put a temporary freeze in support positions. I think it was in 2009, and it was going to be for a year or two. We haven't. That year or two now has been 13 years, and we just began to start to deal with that last year. And we do have a lot of things in mental health and health and human resources. So we need to get a much better handle on that. And this has a negative impact for fiscal 23 of 1.25 billion, and then the
right, and roughly 980 million of that roughly is already in the current budget.
Right.
That was introduced by Governor Northam. Yeah. So, and I certainly, as I indicated, would be flexible on what we can look at working to what we can.
So I think what we need to do is to basically say we would go forward, that we would adopt this, but put the clause on it that we've not been using much this year, to basically say that we'll have to deal with it as we move forward on things.
It would be a little different kind of clause, but that would work.
Yeah.
I was going to say, Madam Chair, Senator Barker, can I just confirm, are you moving to 250 and the 500 with the special revenue clause that has been used in the past? Or are you at the higher amount in Senator Hanger's bill as it is
I think that
currently?
use what's there now, so the 250 and the 500. And then if we have resources, once we get a reforecast of what revenues are likely to be for the rest of 22 and then 23 and 24, which may not be insignificant. So,
right.
So we'll have to sort of package that all of that as we work through the budget. So,
but I would hope that if any press is covering this, they don't make it appear that this is what it's going to be.
Right, right. And I want to be clear on that too. I'm prioritizing our core responsibilities back to local governments, because I think in effect, if we do that, it will become a tax relief for the taxpayers, because the local boards won't have to put it on real estate.
Yep. Yep. And the local boards have been paying 100% of a lot of the costs within the school systems because we've had things frozen with the support gap.
Yes, Lisa.
Madam Chair, to address kind of this influx issue, I think that instead of doing a clause, as we typically think of clauses, we could actually just amend the bill, because this is a Section 1 bill, to take out dollar amounts and just say that the refund shall be reflected in the appropriation. That if there's a refund, the amount will be reflected in the General Appropriation Act adopted by this session.
That sounds fine.
That's
what I meant.
Right.
Okay.
And Governor Youngkin, Governor Northam, and all of us will take credit for it then.
Okay, is there a motion there?
Yes, I'll make a motion to limit it to what's in the introduced budget right now. Deal with that as well as with what Senator Hanger has proposed as we work through the budget and sort of come up with a dollar figure, whether it's higher or lower. We'll sort of see where we are.
All right. Thank you, Madam Chair.
Thank you. Thank you, Senator Hanger. Senator Peterson.
Thank you, Madam Chair.
Sorry you had to wait so long.
No, it's actually just got done selling a car wash, so not wasted time.
I'm sorry, we didn't vote.
Oh.
All in favor of the motion, please say aye.
Aye.
Now we vote.
Thank you, Madam Chair, members of the committee.
You sold a car wash while sitting here?
Yeah, it's on Route 1, and
I wish you had washed my car.
well, I had to negotiate my own fee down a little bit, but it works. So, okay, anyways, multitasking, we're back on it. I have two bills, one that costs nothing, one which costs $2 billion. So which one do you want to hear first?
Oh, let's give you a success.
Okay, let's give me a success. Possible success. I want to assume that's Senate Bill 692. And Senate Bill 692 deal. Please put it on the docket. This would be a major mistake to not have this heard immediately.
Madam Chair, Senator Peterson, we're working with tax to have some additional information, and it could be heard as early as Tuesday at full committee.
Well, Walter was just here. Let me make a point. This 692 needs to get done with an emergency clause so people that own pass-through entities can use it for 2021. It will not cost our state a dime. Anybody who owns a small business or a closely held business, you're shaking your head, April.
Madam Chair, Senator Peterson, I would like tax to speak to perhaps some of the issues that we know already related to implementation. And then, again, we would like to schedule it for Tuesday at the full committee. If
Can I just describe the bill so you know what I'm talking about? Sure. Senate Bill 692 deals with pass-through taxation, or taxation of pass-through entities, and how it's treated right now under the federal system. As you probably know, right now under the 2018 tax cuts or tax reductions, we have the state and local tax cap of 10,000, what they call the SALT cap. So if you deduct on your federal return, you're capped at 10,000 for personal income in terms of a deduction. However, there's a loophole in the sense that if you own your own business entity and you pay the taxes, you elect to pay that at the entity level instead of passing it through and paying at the personal level. On the federal level, you could take that as a business deduction, as opposed to you can't take it as a deduction by paying it personally. Right. And what this means is, and I wish Senator Stosh was just here, I thought he was going to speak in favor of this. What this means in effect is that Virginia small business owners would have the ability effectively to take their state tax payments, if they pay it through this pass-through entity, to take it as a business expense and then deduct it from their federal return. So again, the window's open right now. I don't know when the feds might close it. And so that's why it's a little bit time sensitive to get this done. And so that's why I wanted to have it heard as soon as possible. And by the way, this was not my idea. I'm not smart enough. It was brought to me by Edward Mullen on behalf of somebody very smart at his law firm, but that's the background.
Madam Chair, I would ask tax. I think tax has done some work on it, some possible options. If they want to, they could go ahead and speak to it. And then again, we could take it up in full committee on Tuesday if you're amenable to that.
Sure. Madam Chair, Kristen Collins from the Department of Taxation again. And I apologize to Senator Peterson. We had just published the impact statement, and I sent an email, wanted to talk to you before your bill was heard, so I apologize you're hearing this for the first time now. So the bill, it would create essentially, in terms of our system, almost a new tax structure that would need to be built. So we don't have a problem doing it, we would just need time to build it. And since the current filing season's already started, we wouldn't be able to implement it until 2022. There are two options, though, that we came up with for you. So one option is to delay the effective date by 1 year till tax year 2022. The other one is, you could draft the bill in a way where the entities make the election on their 22 return, and then taxpayers could go back and amend their 21 return to reflect it. So that was kind of, I wanted to talk to you about that before we got here, so I apologize. This is all new information.
Okay. And I'll work with tax, and again, it's revenue neutral for the state, and the window's open now. I just think it would be a nice little bonus for small business owners.
Right. Okay. So if you can work on it with tax,
Sure.
and we'll put it on the docket for Tuesday.
Thank you, Madam Chair.
Okay.
The other one is the minimum standard deduction bill, which is super simple. It just matches us up with the federal level. And I will tell you, when I first looked at this a couple years ago, the fiscal impact was $1.2 billion, and somehow it went to $2.3 billion. So I'm not pretending that this is going to get suddenly done with the stroke of a pen. There are other minimum standard deduction bills out there. I happen to think minimum standard deduction is the easiest way to provide tax relief to the general public. I know I may be in the minority on that, but this bill obviously is too large in its current shape to go forward. There are bills that are smaller or have a lesser bill, so I'm happy to be rolled in or, do whatever you want. But I do think at some point we're going to have to address minimum standard deduction, which is right now at only $9,000. for married family. Okay.
Okay, so we'll do.
You'll do what you got to do. Okay.
Yep. Thank you. Senator Sproul, and then Senator Norman.
Madam Chair, good evening to you. To all your cohorts, how y'all doing this evening? Senate Bill 103. Madam Chair, 103 would amend the Shipping Logistics Headquarters Grants Program established during the 2021 General Assembly session as part of the Commonwealth Custom Grant offer to the CMA CGM Group to expand their Virginia operation. This group, a world leader in shipping and logistics, will retain and expand its North American headquarters in the city of Norfolk and establish its Z-Box in Alexander County. A startup incompetent and acceleration. The company will invest $36 million, retain 655 jobs, and add 415 new jobs in Virginia. The General Assembly Major Employment and Investment Project approved commission initially reviewed as approved in Virginia last section. So, Madam, we do have someone here, Madam, to speak for the vote.
Well, actually, this was approved by the MEI.
Yes, ma'am.
Which is sort of a commitment that we will do it.
Yes.
So is there a motion on this bill? It's been moved and seconded to recommend reporting. All in favor, say aye. Aye. Any opposed? It's recommended for reporting. And Christie, we didn't need you.
Good. Thank you. Madam Chair, I got $1 or $2 to bills. You want to take those up now?
Okay, I think Senator Norman has the remaining bills, I believe.
Thank you, Madam Chairman. Is it all right if I just present them here?
Yes.
All right, thank you. I'll be as abbreviated as I can and not my normal loquacious self. If I could first take up Senate Bill 107. Senate Bill 107 is a proposed amendment to the marijuana legislation. You will recall that when the legislation was passed last year, that we provided for distribution of the tax that would be coming from that. And we created 4 specific categories. And what I proposed is to amend the second category, and that's where 30% of the projected revenues were to go to the Cannabis Equity Reinvestment Fund. And that code provision's 2.22499, but what it, just to refresh your recollection, if you don't have the code section in front of you, I do. The 30% was to be distributed amongst 5 different categories: persons and families and communities historically and disproportionately targeted and affected by drug enforcement, scholarship opportunities for historically marginalized persons, grants to support workforce development and mentoring programs, once again spread to disproportionately targeted drug enforcement, the Virginia Indigent Defense Commission, and the Virginia Cannabis Equity Business Loan Fund. I suggest, Madam Chairman, that you will note in the proposed legislation, I did not suggest how to spend that money that would be saved, and I was going to leave that to the discretion of the committee based upon financial needs that we might have. But that's very simple. It takes 30% of the tax money that's generated and goes to the general fund, but subject to reappropriation by us.
Thank you. Did anyone wish to comment on this bill? Yes.
Good evening, ladies and gentlemen.
Good evening.
Especially my senator over there.
I'm Marty Jewell, and I'm with the Richmond Crusade for Voters, former city councilman here in the city, as well as chairman of the Cannabis Equity Coalition of Virginia. I'm shocked that anyone would suggest taking away that 30% out of the Community Reinvestment Fund. As I understand it, it would go to building schools. As badly as that needs to happen, I thought we just had a $2 billion surplus this year, number one, and nobody's suggesting up until now to use any of that money to assist in badly needed school construction across the Commonwealth. Number two, we have 132 municipalities in the state of Virginia. I challenge anyone in this room to tell me one that includes African Americans in its economic mainstream. Not one. And here's an opportunity to lift up communities that have been badly impacted behind 50 years of a so-called drug war. And we're bleeding. Now, the tobacco settlement fund, this is sort of like that, except the tobacco fund does not provide help out of its fund for anyone north and east of Dinwiddie County. And then we've got the opioid money that's supposed to come. I heard it was $565 million. All that money is going to probably go out to folks in the mountains and Southwest Virginia. At what point do the largest majority of people of color get an opportunity to heal and make repair? And so why would we take that money out when it isn't enough? 2 weeks before we passed our bill in Virginia, New Jersey passed their bill and put 70% in their equity community reinvestment fund. I don't understand this, and I don't understand the motivation for it. But when I look at the other provisions in the marijuana bill, and they're all under attack, they're being poked by Republican legislators, I can't help but believe that war has been declared on black folk. I'd love for anybody to tell me I'm on the wrong track. But if not, I just have to take it that we're under attack wholesale by parties here down in the General Assembly.
Thank you.
Thank you much.
Thank you. Your time is up, but thank you for your comments.
Madam
Is
Chairman.
Madam Chair, we have 6 people on the Zoom who would like to speak.
Okay.
Sheba Williams, would you please unmute and begin your testimony?
Hello?
Yes, we can hear you.
Okay, well, my name is not Sheba Williams. My name is Vicki R. Williams Cullens. Wanted to correct that in the record. I also am a member of the Cannabis Equity Reinvestment Board. I vehemently oppose this bill. Money going into the general fund would most certainly not affect or be directed to people that this money was designed to assist, especially people who were disproportionately impacted by the war of drugs, exactly all the elements that Senator Norman had stated. Additionally, I ask that this bill do not go forward. I absolutely do oppose it. And I also take umbrage with the fact that this bill was developed without any input from any of the members of the board. We have all been seated and we were never contacted. So I thank you very much for your time. And Madam Chair, I thank you very much. And the members of the committee, I thank you very much for the opportunity to have my voice heard. And I ask that this bill not move forward, and I ask this bill be killed, actually. Thank you so much.
Thank you. Unfortunately, we don't have time for further public comment, but I would like everyone who is on the Zoom who would like to say something to please give your name any organization you're with, and whether you support or oppose the bill.
And then Reverend Dr. Lester Fry, would you please unmute, say your name, your organization, and if you support and oppose?
Yes, my name is Reverend Dr. Lester D. Fry, and I am the first vice president of the Baptist Ministers Conference of Richmond and vicinity. Also the program director for the BGC, and program director for the Black Coalition of Change. And we vehemently oppose this bill, and we think it's a real disgrace. Thank you.
Evan Smith, would you please unmute?
Hi, my name is Evan Smith, and I'm a community organizer with Marijuana Justice, also a resident here in Richmond, Virginia. We strongly oppose this bill, and we thank you for the opportunity to give a comment on this. Thanks so much.
Richard Walker, would you please unmute?
Walker, founder, CEO of Bridging the Gap in Virginia. My organization, as it is, we're waiting for funding coming back from Dominion, and we haven't gotten that. And here's an opportunity that our low-income communities of color can have an opportunity to come back from the horrors that have taken place over the years in the Commonwealth of Virginia. I vehemently oppose this legislation. Thank you for hearing me.
Chanda McGuffin, would you please unmute?
Yes, I am Chanda McGuffin from Waynesboro, Virginia. I am one of the co-founders of the RISE organization. Our mission is to give voice and hope back to the Black community. Since we only have an option of oppose or agree, we vehemently oppose this bill.
Janetta Corselius, would you please unmute?
My name's Jeanette Corselius. It's spelled wrong up there. Sorry, someone just muted me. I don't know who just did that. I vehemently oppose this bill. Any measures to further incarcerate and keep Black and brown folks away from equity and marijuana justice is not something we should be doing here in the Commonwealth. And like I said, any other bills doing anything like this need to be opposed. Thank you.
Thank you.
Madam Chair, those are all the hands raised at this time.
Thank you.
Madam Chair.
Yes, Senator McClellan.
Speaking to the bill, and I'll be brief. There's lots of data, lots of research, lots of articles that show how the war on drugs in general and the enforcement of marijuana prohibition in particular, the devastating impact it has had on families and communities, particularly low income and Black and brown families and communities. And for some of us who frankly don't care about marijuana, do care that if we're going to legalize it, that we do it in a way that redresses that harm. And the Cannabis Equity Fund was a critical component of that and allowed those people impacted to have a more direct say on how cannabis money would be used to redress those harms by giving them representation on the board and more input in how that money is spent. Frankly, more input than those individuals and communities have ever had in the General Assembly as a whole. And looking at how the general fund has been spent over the years is a good indication of the success that those individuals would have in directing those funds in the communities. And for those reasons, I move that this bill be PBI.
It's been moved. Is there a second to PBI? It's been moved and seconded.
Ought to be heard.
And yes, of course you can. And if the patron would like to speak.
You know, I can have a rather sharp tongue on occasions, and I categorically reject the egregious language that some of the speakers have used. But I'm not going to respond in kind because it would be like dueling with an unarmed man if I started on this. We have a policy issue in front of us, and that's how I view it, as a policy issue. And we can have disagreements on the policy approaches and do it in a civil manner. And my amendment is not quite as egregious as it appears, because it does give the General Assembly the opportunity to retarget some of that money, as opposed in these amorphous, undefined terms that are within this bill as it now exists. And that is my end goal. And I was not presumptuous to try to reallocate that money in areas that might not address the concerns of a majority of the General Assembly. And I appreciate that those of us that have the privilege of serving in the legislature understand these issues better than some of the citizens on the outside. Maybe that's our fault for not educating them as well. But I think that some of the speakers think there is something nefarious that is going on here, and it really is not. So I'll just make that very clear, but it doesn't mean in my mind that there are not thoughts that I would like to respond to.
Okay, thank you, Senator Norman. The motion before us is to PBI the bill. All in favor, say aye. Aye. Opposed?
No.
The recommend. Oh, Senator.
It would be a no.
Oh, he didn't. Okay. He didn't specify.
I know
Okay.
how it feels.
Okay, so the recommendation is to PBI the bill. Senator Norman, I think you have one more.
Yes, ma'am. Yes, ma'am. Thank you very much, Madam Chairman. And that's Senate Bill 560, and I'll try to be abbreviated on that. I'm confident that, excuse me, the members of this committee remember that when there was the Tax Cuts and Job Act of 2017, that there was, on a federal level, that there was an increase in the amount of the deductions that's due to expire on 2025. We in Virginia responded, I think, in 17 and took it from 3,000 to 4,500 individually, and from, excuse me, we took it from 3,000 to 4,500, I believe is what it was individually. What I am proposing is that there's been some talk of a surplus, which is frankly an anomaly. We never have a surplus.
We never do.
We have unanticipated revenues, which may sound semantical, but it is a very different situation. This is pretty simple. It increases the deduction from 4,500 to 9,000 for single filers, and 9,000 to 18,000. The only thing that occurred to me that might be a reasonable adjustment is because in 2025, the federal act reverts back, and the increase that they made federally in that deduction will expire. So I know some of you don't maybe not have an appetite for it. I didn't know if just rearranging the timing of it would be a different approach. There's a lot more I can say, but there's no sense in it. I'm a pragmatist.
Senator Norman, I think the concern I have, and I can't speak for my colleagues, is the price tag on it, which is $1.2 billion in 23, $850 million in 24, and $862 million in 25. That is a substantial.
But Madam Chairman, we're awash with money.
Yes, of course we are.
But this really is something that, and I don't say it argumentatively, it's really dedicated more towards middle income taxpayers that would really benefit from that. But I understand what you're saying.
Would you like this bill to be sent to the joint?
Yeah.
Okay.
If that's my most positive alternative.
Yes, that is your most positive. That's where, yes. So, yes, he would be willing to have his bill sent to our joint subcommittee on tax policy.
Yeah.
Is there a motion? Let's just do it.
So moved.
Okay,
Yeah.
second.
All right.
And it will be, thank you.
I appreciate it. Yeah.
Okay, does that,
Madam Chair, I would say we had one more bill, I believe, on the docket. It was Senator Suderland's bill. Would you like staff to tell you? It was very similar to Senator Norman's bill.
Right, right.
Senator Suderland's bill also increased the standard deduction for single and married filers. It doubled that, but it did have the provision that Senator Norman mentioned that would take it back to what it was with the expiration of the Tax Cuts and Jobs Act. So that is the difference, but it does still have that impact of over $2 billion over the biennium.
well, I hate doing anything without him here, but since it is basically the second,
Right.
Perhaps it should have the same outcome of going to the joint subcommittee.
So moved.
It's been moved and seconded that Senator Superline's bill go to the joint subcommittee. All in favor, say aye.
Aye.
Any opposed? Okay. Does that now complete the agenda?
Madam Chair, will we report that Senator Peterson's bill failed to receive a motion? Is that how you would like us to report that?
Yes. I think the committee will rise.
All right, thank you.